Good morning, students. This is Mrs. Anu Mendonça, your SP teacher for the year. So, today we'll be starting with the first lesson of your chapter. But before that, I hope everyone is safe at their homes. And seeing the situation right now, we have to take the necessary precautions for the future. So, on this note, we'll start with the first lesson of the topic. But before we go to the topic in detail, let us have a look at some of the concepts which we had studied last year. Okay, so here's the screen, just go through it while I'm teaching, pay attention. Meaning of corporate. Now, what is the exact meaning of corporate or normal meaning of corporate you are aware of? Correct. It is relating to large company or group of companies, you can say. Last year we studied what is the meaning of company. It is a voluntary association formed by a group of persons, and yes, registration is compulsory. So here I have given an example, JSC, that is joint stock company. Next is meaning of finance. What is the meaning of finance? When I say finance, what is the first word that comes to your mind? Ask yourself the same question. Correct. Money. Pesa. So finance basically, when I tell you all in normal terms, it means money. But in SP or in this particular topic, finance is not just only related to money, but management of money. Correct. So when I tell you all the word finance, it includes two M's. That is, finance equals money plus money management. Now, money management involves managing inflows and outflows. What do you mean by inflows and outflows? When we are talking about a company, especially a joint stock company, usually sole trader and partnership, they don't require that much amount of finance or money for their working. But when I compare a big organization like JSC or joint stock company, they require huge amount of capital or finance to run their activities. So inflows refers to the amount of money which comes into your organization. That means in the form of profit, income, revenues, etc. I hope you all are aware of these terms. When I talk about outflows means the amount of money spent by the organization or the money which is going out from the business company. For example, money spent on production, distribution, manufacturing, purchasing of raw materials, machinery, assets, etc. So we'll be learning in detail what do you mean by all these terms which I just now told you all. So when I combine corporate and finance together, the term becomes corporate finance. Yes, you all got it right. So today we'll be learning the first lesson of your syllabus, Introduction to Corporate Finance. So as I told you all, we'll be learning about how a company, big firms, large business organizations like Tata, Reliance, you must have heard these names. These are big companies. How they manage and acquire finance. That is how they get money and how they utilize it. Correct? So moving forward with the topic, Henry Ford has given a very nice meaning of money. Money is an arm or leg. Use it or lose it. So it's very simple definition and self-explanatory. As God has given us hands and legs, if we don't utilize it, there is no use. We say the man is sitting idle. So that is why same ways money. If you keep it, it will not bring you anything. It is your arm or leg. You have to use it, otherwise you will lose it. So corporate finance, when we talk about, is nothing but keeping in mind two A's. Now, what are these two A's? As you can see the formula down. Corporate finance equals acquisition of money plus application or usage of money. So as I told you, corporate finance की जब हम बात कर रहे हैं, आपको याद रखना है आप acquire कैसे करते हो money को, that is how do you get the money into your organization, that is inflows, plus how you apply it, how you use it, that is outflow. So start में समझाया था आपको money management is managing inflows and outflows of the company. So यहाँ पे you can revise one thing, corporate finance equals two E's, acquisition of money and application of money. In order to go in detail, this is the framework, the outline, the blueprint. ये outline है, border है, 2A. Now we have to go into the detail, the center part which we have to fill. So corporate finance equals FCI, F plus C plus I. तीन चीजें हैं. F stands for financing the activities of the corporation, C stands for capital restructuring, and I stands for investment decisions. Financing the activities of corporation. What do you mean by this? As I told you, business has lots and lots of activities, right from acquisition of finance to manufacturing to distribution to see to it that the product reaches to the customers. Also, they have to spend on advertisement, give salaries to their employees, manage the expenses, electricity bill, telephone bill, printing, machinery. All these are included in financing the activities of the corporation. And all these are only smooth until and unless you have money in your organization. कैपिटल रीस्ट्रक्चरिंग, नाम में ही मीनिंग है रीस्ट्रक्चर करना. रीस्ट्रक्चरिंग मीन्स इन द further slides you will see two alphabets I'll be using, D and E, debt and equity. So at that time I'll explain you all what does that mean. So for the time being, just remember capital restructuring, to restructure the capital in your organization. And the third is investment decision. As I told you, the very first stage, inflows, investment, the capital which you have to start your business is not enough. You need capital, you need other people to invest in your company. So all the investment decisions are also included under the head corporate finance. So clear up till here? Good. Continuing further, the term corporate finance also includes the following. When I say corporate finance, apart from financing, money management, there are other terms also you can include under it, such as you can see, number one, financial planning, number two, capital market. Now, when I talk about capital market, it refers to long-term investments. So as you can see, I've written in the bracket, long-term investment such as shares, debentures, bonds, etc. So don't worry, we'll be studying in detail in the further this thing as we go on with the topic. Money market. If capital is long-term, money market is short-term. Short-term investments such as certificate of deposits, treasury bills, interbank loans, etc., which all have a maturity period of less than 1 year. So basically, when I talk about money market may have written two terms, certificate of deposits and treasury bills. These are nothing but options started by the government. They offer to the public to invest their money in it. And in return, they get acknowledgement or receipt in the form stating that so much money has been deposited with us after the maturity period on the basis of this particular paper. It's a paper, a certificate, as in like you get when you win some competition, you get a certificate in which everything is specified, your name, the activity which you participated, your position, and then it is signed by principal, vice principal, the sports in charge. In the same way, there are certificate of deposits and treasury bills which are given by the government. and started for the public to invest their money. It's a kind of savings, you can say. So the public can invest money in this, buy the certificates, and after the maturity period, that is usually they are less than 1 year. So as the maturity period is over, they get their money back with some kind of interest on it. So that is money market. Apart from that, there are share market, foreign capital, capital formation, financial organizations, and banks. So together, all these terms are also covered under the term corporate finance. Now for your reference, see, as you can see, I have shared some examples. What is a certificate of deposit? So this is a certificate of deposit of Bank of India. As you can see, it is in the form of a certificate. You can see there is a LF number, that is ledger folio number, the account number. In the center, you can see it is written short deposit receipt. Received from so and so. It's a deposit of 5 lakh only. So that is with an interest rate of 7.25 for a period of 5 years. So after that much, now this is an example of a 5-year period, long term, but such certificates are also given for a short term period as well. So you get the amount plus some kind of interest. Just say you invest in FDs in banks, fixed deposit. After certain year, the maturity period is over, you get it with some kind of interest on it, correct? So these are examples of certificate of deposit. This is an example of treasury bills, as I told you. See, it's written on the top, Government of India. So these securities are issued by the government, as I told you, keep in mind, not by any other private company or public company. No, this is done by the central government, or you can also say it is done by RBI, Reserve Bank of India. So such securities are issued by the government. So I hope till here the topic is clear. Now, all these decisions are not taken by any, say, entrepreneur or the shareholder or the promoters which start the company. All these decisions are being taken by finance manager. So the corporate finance thing, you must have heard of positions of finance manager nowadays. Now, what is the responsibility of a finance manager? He is responsible for taking two important decisions for the company. Now, what does these decisions involve? As we had seen, F plus C plus I, remember? So, usi mein se, the first decision which he has to take is financing the decisions. And number two, investment decisions. So, these are the two important decisions the manager is responsible for taking for the organization. Now, what is covered under financing decision is, remember I told you all capital restructuring. I would use the two terms E and D. So here they are. Number one, equity capital. Number two, debt capital. Now, what is equity capital? Equity capital is nothing but it is the capital which is brought by the owners of the company. It is the owned capital. It is the capital brought by the shareholders. For example, it includes two things, SR. What is SR? Shares and reserves. And number two, debt capital. Debt, you all will be familiar with it. In accounts, you must have studied. Debt means liability. Liability means karza, taking money from somebody else. Borrowed capital, आप borrow करते हो, उधार लेते हो. So debt capital includes various options. The smart code I have written is DPLLB, that is debentures, public deposits, loans from banks, loans from financial institution, and bonds. So regarding how much capital is required by the company, that is अपना कितना capital लगेगा, बाहर वालों से हमें कितना लेना है, all these decisions are taken by the finance manager. He has to see whether the combination of E and D are proper or not. That is, there should not be imbalance, like more of equity, less of debt, or less of equity and more of debt. It should not be disequilibrium. Disequilibrium is it should not be imbalance. There should be a proper balance, or say right combination, 80-20, 75-25. Such kind of ratios has to be, which has to be taken care of by finance manager. Coming to the investment decision part, investment decision includes use of acquired funds to maximize the returns for its owners. Now, to explain your very simple concept, just pay attention to the example which I'm giving. For example, take you have two friends of yours and you require some money. Right now, you don't have any money. So, you are thinking like, I'll ask my friends, I'll borrow from them and चल मैं उनको बाद में return कर दूंगा, ठीक है? So, for example, you're Mr. A. You go to Mr. B and you tell him, can you please lend me 100 rupees? I'll return you later because it's an urgency and I don't have it right now. So Mr. B says, okay, fine, you take, I'll give you 100 rupees, but when you return it to me, you have to give me 110 rupees back. This is the first offer. Now you say, well, okay. But then for a minute you think, chalo, let me ask my another friend. देखते वो क्या बोलता है मेरे को. So you go to Mr. C and you say, hi Mr. C, actually I needed 100 rupees as I'm borrowing it from you and I'll return you soon because it's an urgency. I don't have the money right now with me. So Mr. C says, yeah, fine, why not? तो मेरा यार है. So he gives him 100 rupees, but as it is a money concern, so Mr. C says, okay, I'll give you 100 rupees, but you have to return me 105 rupees back. Now, I hope you all have listened to me very carefully. I told you all, one person is lending 100 rupees but asking 110 rupees back in return. Same way, Mr. C is asking 105 rupees back from the person. Now, the extra amount which I told you all, that is 10 rupees and 5 rupees, this is nothing but the interest they are charging, correct? B and C are giving 100 rupees to A just with the motive of they will get something back in return apart from the money which they are lending. So this extra amount, 10 rupees and 5 rupees, is nothing but maximization of returns of its owners. जैसे when you take loan from the bank, जैसे 10,000 आपने लिया, you don't return only 10,000, correct? You give 10 plus the rate of interest for the number of years you took the loan. In the same way, when somebody is investing in your company, they will not give it for free. They are expecting that they will get something back in return. So that returns should be maximized. ऐसा नहीं है कि 10 रुपए डाल रहे and you're getting only 1 rupee back in return. That should not be the case. So the investment decision includes use of acquired funds to maximize the returns for its owners. जैसे when you take the loan, you pay interest on it. So for bank, interest उनका revenue है, income है. In the same way, when owners invest in your company, when public invest in your company, at that particular time, इन्वेस्टमेंट इन शेयर्स, लास्ट ईयर आई टोल्ड यू ऑल, शेयर्स के ऊपर आप लोगों को क्या मिलता है? डिविडेंड. दैट इज द इनकम फॉर द ओनर्स. सो द फाइनेंस मैनेजर हैज टू सी whoever is investing in the company, क्या हम उनको मैक्सिमाइज्ड रिटर्न्स दे पा रहे हैं या नहीं. दिस रिटर्न इन एसपी is called as cost of capital. You are getting the capital, but at the cost of something. You have to pay them something back in return. That, for example, 10 रुपए और 5 रुपए जो एक्स्ट्रा इनकम आप आपके दोस्तों को रिटर्न करने वाले थे. And if I ask you all, in both of them, which option should be preferred? So most of you all will say Mr. C, because वहां पे आपको सिर्फ 105 रुपए देने हैं. That is 5 rupees extra you have to pay. जबकि when we are talking about Mr. B, उसको 110 rupees वापस चाहिए थे. So that is the decision the finance manager has to take. कहाँ से borrow करना है कहाँ से इन्वेस्टमेंट लेना है, and whether you are able to give them maximum returns on whatever they are offering. So cost of capital, in simple words, remember, it is the minimum returns expected by the investors. So up till now, concept clear? We'll take a quick brush up. We started with what is the meaning of corporate, what do you mean by finance? Then after that, corporate finance is equal to two A's: acquisition of funds, application of funds. Then uske alawa corporate finance equals F plus C plus I. And now we are on finance manager is responsible for taking two important decisions: financing decisions and investment decisions. Cool? Can we move forward? All right. So, as I told you, the finance manager has to ensure that the firm is well capitalized, that is, right amount of capital and right combination of debt plus equity. मैंने बोला था ना, disequilibrium नहीं होना चाहिए. There should be right combination of capital which should exist in your organization. So the lookout is of finance manager. The finding of the right investment and deploying the investment in favor of the company together is called as capital budgeting. बजटिंग नाम में मीनिंग है, जैसे आपके घर में हर महीने जब सैलरी आती है, इट इज द मदर और द हेड ऑफ द फैमिली हु डिसाइड्स कितना पैसा किस किस में इन्वेस्ट करना है. इतना दूध वाले का बिल, इतना इलेक्ट्रिसिटी का बिल, इतना घर के राशन के लिए, इतना गिविंग टू the maid who's coming to your house for working. So this way it is the finding the right investment and deploying. Deploying means using it, investing it. So finding of the right investment and deploying the investment, same way जब पैसा company के पास आएगा, once you acquire it, how to apply it, how to use it, right money at the right time, at the right place for the right product. All this decision together when we are using in favor of the company, which is taken by the finance manager, it is called as capital budgeting. तो शॉर्ट में अगर आपको याद रखना है, what is CB? CB equals FI plus DI, finding the right investments and deploying the investments at the right place. That is called as capital budgeting. Okay. Now, after studying the introduction part of corporate finance, after understanding के money कैसे आएगा, how to manage it, where to invest it, whether we are giving back properly to the owners or not, we'll come to the next topic and very important question. What is the importance of corporate finance? Now, in SP, you have to remember ample of theory answers, and it is very difficult to remember each and every point. So I'm making efforts from my end. If you can utilize it, it is better and good. Otherwise, you can follow the pattern which you undertake for your studies. So in order to remember certain answers, I have made smart codes for you all. Now, smart code means to remember the pointers of the answers. Please don't write these smart codes in the exam. Don't give the heading. Just for your remembrance, you have to understand and keep in mind the smart code, which will help you to remember the pointers of the answers. So as we go with the first important answer, brief answer of the syllabus, I've made the smart code here. You must have seen Mr. BPH. This is your smart code, MRBPH. In this, P comes thrice, that is 3 times, and H is coming 4 times. So this is the smart code which you can remember to study the answer. What is the importance of corporate finance? So moving with the first point, M, managing the risk. Now, corporate finance helps the company to manage the risk. Now, when I talk about risk, what is risk? Usually, when you are in business, you cannot play safe. You have to take certain risk, certain decisions on the spot, which can lead to profit or which can make you lose whatever you have. But taking that risk is very important. Now, when you are in business, for example, take the current situation right now. When the lockdown situation happened, there were many businesses who were affected, right? There were many productions which were not taken. All the factories had to be closed down. All the businesses, those who were not able to work from home, they are suffering. So everybody suffered because of this pandemic which happened. And now still it is suffering. It is a very big jhatka which has, come for our country and never expected so. So, in the same way, business also has to go through ups and downs. Like, for example, during rains, if there is flood, natural calamity, or say, किसी गोडाउन में आग लग जाना, goods चोरी हो जाना, damage हो जाना during transit. These are all the risks which business has to undertake. And you'll study in your accounts also in the first chapter itself. You have two types of goods: insured goods, that means insurance जिन goods का आपने किया हुआ है, and uninsured goods जिस goods का insurance नहीं किया है. So when you have insurance, you can claim for the loss, but if you don't do insurance of your goods, you cannot claim it back. That's a loss for you which you have to bear. So corporate finance helps deal with the risk, and as a businessman, you have to take certain risks. So to manage those risks, corporate finance helps you. If your company has right combination of equity and debt capital, definitely you'll be able to handle all the risks which you take in your business. Second, replace old assets. Assets means the ones you own. Assets are of various types. Fixed assets, that is for long term, जैसे land, building, plant, machinery, all the machines, computers. These are all your fixed assets. Now, at times, we have to keep our assets, our machinery, our techniques up to date. And as per changing technology, you cannot use outdated technology to produce goods, right? तो आपको आपके assets को replace करना होता है, repair करना होता है. So for all that you need money. So in that case, corporate finance can help you out to replace your old assets with the new one. So Mr. Clear, M and R, M manage risk, then R replace old assets. Number 3, brings coordination in activities. There is coordination, there should be coordination in various activities. Otherwise, you won't be able to do anything. For example, जैसे मैंने बोला, business has to undertake various activities, right from purchasing the raw materials, that is production, उसके बाद distribution, उसके बाद advertisement, promotion, manage salaries of the employee, pay bills of the company, bear losses. These are all activities which have to be in coordination. In a company, there are various departments: marketing department, finance department, human resource department. इन सब के बीच में coordination होना बहुत जरूरी है. That is why और ये सब activities चलती भी कैसे है? Only because if there is money, because no activity in the world is free of cost. You have to pay for it. So corporate finance helps you to bring coordination among various activities in your organization. अगर पैसा होगा तो सब चीजें smoothly चलेंगी. If there is a single इधर उधर कुछ हुआ जरा सा भी, so you have to suffer. The activity gets disturbed. Payment of fees or taxes. As I told you all, there are various taxes business has to pay. जैसे corporate tax हो गया, income tax हो गया, property tax हो गया. Then you have GST, पढ़ा था ना हमने, goods and sales tax, goods and service tax. So ये business को बहुत सारे taxes भरने पड़ते हैं, जिसके लिए what you require? Finance. In the same way, many fees, the salaries of the employee, the fees means if you are calling somebody from outside, for example auditors, अगर हम auditors को appoint करते हैं जो आपके accounts check करने आते हैं firm में, they don't do it for free, right? You have to give some kind of remuneration to them. So fees you have to give, expenses you have to see, salaries you have to give to the employees. For all this you require finance. Next, payment of dividend and interest. As I told you, dividend किस पे दिया जाता है? Shares पे दिया जाता है, because public invest करती है आपके company में. Similarly, interest किस पे दिया जाता है? Loans पे दिया जाता है. So all this requires money. At the end of the day, dividend भी क्या है? Money है, income है. In the same way, interest is nothing but income or dividend. So at least 5 points clear. Mr. BPH में से there are 5 points which are clear. So quickly revise it with me. Managing the risk. Number 2, replacing old assets. Number 3, brings coordination in activities. Number 4, payment of fees or taxes. Number 5, payments of dividends and interest. Sixth, promotes expansion and diversification. Now what do you mean by expansion and diversification? नाम में ही मीनिंग है. एक्सपेंशन मतलब बिजनेस को और बड़ा करना है आपको. अगर आपने एक प्रोडक्ट से शुरुआत की है, यू कांट स्टे इन इट. जैसे आज का सिचुएशन ले लो. आज की सिचुएशन में क्या हुआ है? जो कंपनीज जो प्रोडक्ट पे फोकस करते थे, दे आर नॉट डूइंग द सेम थिंग राइट नाउ. For example, big industries like Mahindra and Mahindra, they are manufacturing ventilators also right now. Why? Because it is the need of the hour. Many people have started making N95 masks. Masks बनाने का business चालू किया है. You must have seen those who were doing businesses like say laundry business या other businesses. Now that businesses are not in operation because of the lockdown. So they have started selling grocery items, vegetables, fruits, because that is the need of the hour. So in the same way, as per the changing times, business also has to change. It cannot remain static. एक जैसा नहीं रह सकता वो. So if you have to expand your business, diversify your business. Diversify means making different product lines, introducing different products. So for that you require money, finance. So that helps you to promote your expansion and diversification of the business. That is making your business bigger and more bigger and expanding, not limiting it to certain extent. Seventh, helps in smooth running of the business. अभी तक हमने जितने points पढ़े, if everything is going on smoothly, then we can say yes, business is also going on smoothly, then there is no difficulty. So finance helps you in smooth running of the business without any hurdles. Helps in raising more capital. Last year in accounts, single entry ka topic you must have studied, correct? In that topic, you must have seen adjustments में नीचे जो hint देते थे, additional capital introduced, ऐसा आता था ना. So during the year, it is not that कि एक बार पैसा capital raise कर लिया तो और capital नहीं लगेगा. No, this is wrong. Every now and then business requires money. जैसे आप expansion का decision ले रहे हो, आप सोच रहे हो कि मेरे को एक नया product बनाना है, market में introduce करना है. So for all these stuffs you require extra money, and the money which is invested in the business is called as capital. So you require additional capital for your company. So who will come to your rescue? None other than finance. So basically this is another important feature of corporate finance, that if you want to raise capital, finance will help you out. How to raise it, how to ask it, that will help you out in that. Helps in decision making. अभी हमने 2-3 स्लाइड पहले ही देखा था, फाइनेंस मैनेजर हैज टू टेक इंपॉर्टेंट डिसीजंस रिगार्डिंग फाइनेंसिंग, कैपिटल रीस्ट्रक्चरिंग, इन्वेस्टमेंट डिसीजंस. तो इन सब में मदद करने वाला कॉर्पोरेट फाइनेंस होता है. इफ द फाइनेंस मैनेजर हैज प्रॉपर नॉलेज of taking the capital, taking the investment decision, finding the right investment, all these stuff together will help the finance manager to take proper decision and right decision for the company. And last but not the least, helps in research and development. Research and development means every now and then you have to keep information about competitors kya kar rahe hai, what are the strategies they are undertaking, customers ko kya pasand hai, uske liye you need to undertake surveys, research. ये सब करने के लिए बहुत अमाउंट में पैसा लगता है, बिकॉज रिसर्च कैन नॉट बी डन इन कम मनी और फ्री ऑफ कॉस्ट. It requires huge amount of money for R&D. ये एक अलग ही स्ट्रीम है बिजनेस का, जो हर रोज मार्केट में क्या नया चल रहा है, कौन सा नया चीज इंट्रोड्यूस हुआ है, हमारे कॉम्पिटिटर्स क्या स्ट्रैटेजी फॉलो कर रहे हैं. All these up-to-date information is given by the R&D department of the business. So in order to keep that, maintain that, you require huge amount of finance. That is why to manage that department, to finance that department, you had to have the knowledge of corporate finance. So quickly we'll just revise the pointers. What was the smart code? Mr. BPH. P 3 बार आता है, H 4 बार आता है. So M, managing the risk. R, replace the old assets. B, brings coordination among the activities. P, payment of fees or taxes. P again, payment of dividends and interest. फिर से P, promotion or promotes expansion and diversification. अभी 4 H, चारों में helps से शुरू होता है. Helps in raising the capital, helps in decision making, helps in research and development. And what was the last one? और एक था which we forgot. Helps in smooth running of the business. When everything goes in coordination, it will lead to smooth functioning of the business. So with this, the topic for today, I'll wind off. So you can just see how much progress you have made. There are certain question answers which I have put up. This, after listening to the lecture, you can just go through and do a revision of yourself daily, whatever we finish. So tomorrow you'll get the video of the next topic which we'll be covering. The chapter is not over. It's been divided into certain parts. But every day when you listen to the new video, don't forget you have to keep revising what we have learned in the past. That will help you to remember the answers also, as well as if the concept is clear, there is no need to by heart the answers. Try and understand the concept. If you understand it, there's nothing like that. Also keep one thing in mind. I'm just sending you all the pointers like this. As you see, these are the pointers. The explanation part you have to study from the textbook. This is only to keep the answer in mind, the pointers in mind, so that you don't forget what is the next point. Acha ye point ke baad kya aa raha tha. For that purpose, I have made smart codes. The explanation part you have to study from the textbook. It's very easy, simple language to understand. If any doubt, you can just text me. You have the number on the group. You can just text and ask the doubts, put the question, so that in the next session when I make the video, I do need to know what all topics you had doubt on, so we can revise that topics again. Also, if you want to understand exactly what was certificate of deposit or treasury bills, you can Google it. On Google, it is given in simple words. What do they mean in detail? So you can go through once, because if you get more knowledge regarding that, it will be easier for you all to understand the further concepts. Yeah. So with this, we'll wind off the session, and I hope you all are safe. Be safe at home and follow the measures given by the government. Yeah. So after every PPT, you can just go through the check your progress session to see how much you all know it. Okay. So we stop the session here.